SoFi stock and PayPal stock. Those are the two subjects for today's video. I want to react to this one here today, folks. I actually recorded this on Fubo, a segment from Fast Money here today, okay? They spoke about SoFi and PayPal. I don't believe they put this clip on YouTube, so I want to go ahead and react to this, show you guys what they were talking about in regards to SoFi and in regards to PayPal. Hear folks talk about this and kind of share my perspective out there. Then after that, I want to take you through some of the SoFi numbers that I thought were extremely impressive, that I think is very important. We kind of look over those. And, you know, in terms of myself personally, obviously I'm a PayPal shareholder and I plan to continue to buy PayPal for quite some time. Not a SoFi shareholder, but it's one of the very few stocks that I'm not a shareholder of, but I secretly kind of like root for it. And the reason being is there's just a lot of people that are retail investors that have really done their study around SoFi, really believe in the company, and I've just always kind of like I root for those type of people that look into the fundamentals, look at the company, really believe in it. A lot of people were buying the dip last year and into this year, right? I mean, the stock went all the way down to, I think it was $4 or $5. It was tough sliding for a bit, and a lot of retail folks made it through, and now they're starting to make a lot of money in the stock. So, you know, as somebody that's always been, you know, there for the retail community. Obviously, the retail community has supported me over the years since I started on YouTube in 2016. I always try to be there for the retail folks, and I root for a stock like SoFi. You know, certain stories like AMC and GameStop and Bed Bath and Beyond and all that crap, like I don't root for those type of people because they're not in it for the right reasons. They're in it to try to burn the shorts and trying to, you know, hope the stock goes to $1,000 and all that crap. SoFi shareholders have always looked at the fundamentals, looked at the products, like it's just a higher level investor base, and I've always just like rooted for them. And so I hope that stock just continues to kind of go on a tear, just to be quite honest, just for the mere fact that I know there's a lot of people out there that are retail investors that really believe in this one, and I hope everybody makes a lot of money in that one. So yeah, appreciate everybody joining me as always. We are now at a new all-time high subscriber count in the history of the channel. I believe we are now over 31,500 plus subscribers on the channel. I appreciate each and every one of you always being here as always. And I created you guys a free workshop. That's pinned comment down there if you want access to that. How I find 10x stocks. I think you guys will get some really good value out of that one. It's about a 28-minute workshop or so. That'll be pinned comment.
Level in more than a year. The company posting a smaller loss than expected, raising its full-year revenue guidance thanks to surging deposits and demand for personal loans. CEO Anthony Noto laying out a path to profitability for the company's financial service segment.
What are you saying, Noto?
So the lending business on a contribution profit basis has been very profitable. The technology business also pretty profitable. But we've made a big investment in the last 5 years in building out the number of checking savings accounts and acquiring them, as well as credit card and invest.
Okay, before we go any further in regards to these guys' opinions on SoFi, PayPal, and before we dig in the numbers here, okay, I got to say this is very, very important. What has been the knock on SoFi? The knock has not been around how many customers they can acquire or revenue or anything like that. The knock on SoFi has been profitability. Oh, the company's just a huge money-burning company. They lose massive amounts of money. Like, you know, that's been the only knock on SoFi. You can't really argue anything else. Like, SoFi seems like they have a good strategy for the long term. They seem like they're acquiring a lot of customers. We'll review the numbers in just a moment. The revenue's always been super strong for SoFi. The only knock has been around profitability. So when you hear Anthony Noto talking about profitability expectations getting better and better and talking about this business line is going to be profitable and this business line is profitable, you are speaking to a lot of folks that have been on the sideline looking at SoFi thinking, you know what, I'm not going to buy it because they're not profitable. Now saying, you know what, this company's starting to flip. I need to go ahead and jump in this. This is kind of a similar phenomenon that obviously happened in Palantir really, you know, at the beginning of this year when all of a sudden they started to flip to profitability and everybody was like, whoa, what? Palantir's always been known as a money-losing company. It's no longer a money-losing company. Now we're starting to make money on the bottom line. It's huge, huge for attracting investors that won't consider a stock unless it's profitable.
Translate to the other stocks in the space, Dan.
Really interesting, and the dynamics around the student loans, repayments, everything, I think is obviously giving them some kind of wind in their sails. I think Anthony has been, you know, really surgical in how they've built this business away from that core lending business. So kudos to them. You know, PayPal, Coin, Block, they all report this week. It's interesting. You know, all those stocks, I think at their, you know, lows just recently were down, 80-some% or so, and some have had bigger runs than other. PayPal is the one to me. It trades below market multiple. I remember sitting here on the desk with this crew right here, and I remember the stock was down like 7-8%. I was like, they all report this week. It's interesting. You know, all those stocks, I think at their, you know, lows just recently were down, 80-some%.
So, you know, in regards to these, obviously you guys know where my alliance lies. It's in PayPal, right? In over the next several years. Block, you know, I think it's an interesting play. It's not nearly as interesting to me on a risk reward profile as PayPal. Coinbase, I think if you are bullish Bitcoin and Ethereum, I think you kind of have to be bullish on Coinbase over time. I mean, let's just be honest. Almost all their competitors went under last year. Seriously, almost all their competitors went under last year. So where are you going to, like, if you're going to buy Bitcoin and Ethereum and you want to buy it through an exchange, brokerage, whatever you want to call it, you're going to probably go to Coinbase. Like, it's just the natural place to do it. Some people will go through Robinhood, but Robinhood's always known for stocks. They're not known for crypto. So Coinbase is known for crypto, right? And then you could say, well, what about the Binance? But a lot of people are very uncertain about Binance and if that's the next, FTX or something like that. So a lot of people are just uncertain when it comes to that guy. So if you are somebody that's looking to buy Bitcoin and Ethereum, like at the end of the day, you're going to usually go ahead and go with Coinbase. So that's just, that's why that stock's been performing so dang well.
So, and some have had bigger runs than other. PayPal is the one to me. It trades below market multiple. I remember sitting here on the desk with this crew right here, and I remember the stock was down like 7-8%. I was like, I think you just buy it, and it kept on going lower, of course. I buy the thing that's down at 52-week lows, and I did buy it, and then it got back to these levels. So it's right back at those levels. It trades well below many of its peers, well below a market multiple. I thought that guidance was conservative.
Okay, I'm scared. I'm extremely, extremely, extremely scared, okay? Somebody save me. Dan, Nathan, and I almost always disagree on everything, okay? Here we are in a rare situation where Dan Nathan's out here saying he likes PayPal. I'm a little scared, okay? I'm a little scared. But in all seriousness, when you can, sell somebody like a Dan Nathan, this man is always very bearish on, it seems like almost everything. That's pretty, I would say, positive for PayPal stock overall.
I think this one probably sets up okay here, and I think it has valuation support. So this is one I'm most focused on in the fintech space this week.
I'm long PayPal. I've been long for probably 6 weeks. I think it's going a lot higher. I think we've seen major stabilization in their business. Look, Venmo is still...
He's been long PayPal for 6 weeks. He thinks it's going a lot higher. So you can definitely tell that PayPal is going to be able to attract a lot of Wall Street money. Once, obviously, their numbers start getting in a better place, which I think you're going to see very nice numbers over this next several quarters. And obviously, once they announce a new CEO. But it's clear when you can sell guys like this, I think there's a lot of room for upside there.
A global standard. It's still a case where people really think they were losing margins. There were some questions about what were really the number of accounts. I think we've been through a lot of noise. Of all the mega cap tech stocks that have done nothing, this is the one whose business I think is very solid and is given very little credit. I think this goes a lot higher.
86 was like one of the closing lows in March of 2020. Think about that. To Dan's point, we breached all those levels, but that's where it should sort of trend back up to. Percentage-wise from here, it's a decent move, so I think it'd probably go higher in earnings.
Yeah. Julie, are you also fanboying on PayPal?
So let me count that. 1, 2, 3, bulls on PayPal. Holy smokes, this ain't no joke, as the Wall Streeters starting to fall in love with PayPal now at this point in time.
I'd be more comfortable with PayPal than Sofi. I think Sofi has set up a lot of interesting dynamics in its business. The thing is it's never been through a recession, and so we don't actually know the quality of their underwriting. True. It's great for them to say, our book looks great, but it's really hard to know until it really gets stressed. And so I think I'd be more comfortable with PayPal.
So Julie brings out a great point there. 100%. We haven't seen Sofi go through a major recession yet. What happens when they do, right? And obviously, if there's less and less concerns about recession, which clearly as the years ticked on, what do you hear in Wall Streeters talk less and less about? Recession, right? More and more of them are starting to give up on the possibility of recession. So if that happens, then more and more folks can consider a stock like Sofi, right? Which, today's move was probably, I definitely think there's some Wall Streeters that were out there buying Sofi today. Maybe some hedge funds that might have taken a little bigger risk. Or might be able to take a little bigger risk than other folks. So maybe smaller hedge funds and things like that. Because, Sofi's market cap's gone up quite a bit this year. And to get a 20% move, that's a pretty dang big move.
Where I think they've really started to make inroads, particularly on the e-commerce side. You're seeing more and more of it. And so they're proving a relatively good competitor to Shopify. And so I think there's still a lot of potential in there.
A lot of the space hasn't gone through a recession, though. I mean, PayPal has, but others have not. And so, how much is that?
That's 100%. PayPal's gone through a recession, right? And of course, if you want to include the 2020 recession, we can call it that, right? Where they pumped stimulus. And so was it really a recession, right? Square hasn't really been through a recession. That one really got birthed after the great financial crisis, right? SoFi really hasn't. PayPal's really the only one that has of kind of the space. Companies like Affirm, they haven't been through it. So at some point in time, when the big recession happens, we're going to see who can make it and who's going to be hurt in a very, very substantial way. Whenever that time is, which, who knows, is it 6 months, 2 years, 3 years, 5 years, we'll see.
Should factor in. I mean, the average credit score in the second quarter for SoFi, like the new direct deposit accounts, 747.
Boom. That's something that's always really, I think, surprised me in terms of SoFi is their credit scores. Because when I first heard about SoFi, this was, a couple years ago now at this point in time, I was like, okay, a lot of people are talking about it. We got even a lot of people inside the private stock group that were buying that stock in 2022 in this year, a lot of shareholders. So I was like, let me take a peek at this, right? And I'd listen to their conference calls and I'd look at their numbers and I would hear about the credit scores their customer base has. And it was amazing. It's absolutely amazing. I mean, you don't get many companies to have the sort of credit scores that SoFi really attracts, because when you hear it, it's kind of a newer age company, right? You think, oh, it's probably attracting a lot of the younger folks, probably don't have as much money, probably don't have as good of credit scores. And then you start to look into it and it's like some of the income brackets that they really attract is extremely impressive. And the credit scores, average credit score is 747 or whatever she just mentioned there, very high. So I just think that's something worth talking about as well.
It's pretty really high, wow. Really good FICO score.
Well, it's interesting when you mentioned that recession. I don't know
like your SAT score.
Yeah.
Actually, yours was probably
Julie didn't get the memo about the recession.
Well, for just math, math or one of the two. You just double it, you get 1,500.
Anyway,
I'm sure that's
a bit upset about that.
Yeah, Julie didn't get the memo. Julie, there's no recession. It's never happening again. So these companies don't have to worry about that. But it's interesting what happened.
You tell this man's a little jaded because all year these guys have been talking about recession. Market's going to go down big, especially these three specifically. Okay, him the most. He's been the most bearish of the regular people that are on the fast money. He's been the second most bearish, which I've been surprised because back in the day, I never really thought of him as a bear, but man, has he been bearish this whole year. Tim's definitely erred to the side of bearishness most of this year, in my personal opinion. And then they usually have another lady on, Karen, and she's usually, I would say she's actually more constructive, more bullish on the markets overall. So, a lot of these guys have not been happy, clearly, with the moves because they've been way off sides. They haven't been able to prosper the way a lot of other folks have prospered in the market. And then if you've got short positions or put positions, you're just getting absolutely wrecked.
Buy now, pay later, and some of these other models, these financing models. Some of them did not hold up. So again, maybe these guys have figured out. I think the one thing about SoFi is, you think about it, if their like gateway drug to this consumer is refinancing a college loan, you know what I mean? I think generally they have a higher FICO score than they're probably better credits than.
Right. That's a good point.
Yeah.
All right, coming up, we're diving into the options pips to get a read.
So before we get into some numbers that I thought were really worth paying attention to in the report, let me just break down SoFi versus PayPal, okay? And here's how I think about it. SoFi, and once again, I have no ownership stake in SoFi, but I do obviously in PayPal. But the way I would look at it is SoFi is like a higher risk, higher reward play than something like a PayPal, right? With SoFi, you get that incredible revenue growth, which we'll go over the numbers. You get a company that could potentially flip to profitability at the end of this year or 2024, which would be massive for stock because many times you can see a huge move up if that actually plays out that way, right? PayPal, very low forward P, a lot of room for upside in that stock, but does it have the sort of growth for the next 5-10 years like SoFi does? We haven't seen that yet, right? So if they could do that, then that's extraordinary because then you're getting a low stock, a low PE, and that sort of growth. But we haven't really seen that, and I don't even expect that as a PayPal shareholder. So now, obviously, if the market was to go risk off again, if recession concerns were to get amped up again, let's say at the end of this year or 2024, something like that, then I would look for, obviously a stock like PayPal to perform a little better than SoFi on a downward market. So that's kind of the way I would look at those two. And, you could even take an approach, maybe a barbell strategy type approach where you could actually own both stocks, right? One is seen as the safer play, very low PE, profitable cash flow machine, and established businesses that have been through the recessions before, which is obviously PayPal. And you could also invest in SoFi, which you kind of get that, that huge potential move if we're going to go further risk on in this market, right? that could be very, very attractive, especially with student loans starting up again and those sorts of things. So you could also take that approach. It really depends on which one you really believe in. Just make sure whatever stock you are ever buying, you're doing the dang research work. I'm going to keep preaching this because, you know, definitely a lot of folks that have gotten in the past 6 to 12 months have had such an easy time in the market. A lot of people think you don't need to look at reports. You don't need to pay attention on all this stuff. You just buy stocks and they just go up. And there's a lot of work you got to do on the backside, or it will end up catching up to you eventually. That's what I'll say about that. Okay. Now, in terms of numbers, let me show you some pretty amazing things. So right off the bat, this is extremely important. These right here, okay, this specific portion, okay, and the reason that's so important right there is this is GAAP. This is on a GAAP basis, okay? Generally accepted accounting principles. So sometimes people look at non-GAAP numbers and they say, oh, non-GAAP, you know, you can switch out this and switch out that. You know, you can't do that when it comes to GAAP numbers. Now look at this. Total net revenues were up 37%. That's where I talk about with SoFi, you're just not getting that growth usually in almost any other stock. You know, I love PayPal. PayPal is not growing 37%, right? But on the flip side, SoFi is still losing a lot of money, okay? A lot of money. $47 million net loss for the company. But, and this is a huge, huge, huge but, that number has been cut in half over the past year. At this time last year, the company lost almost $96 million. So they got that loss down to $47 million. Now, if they keep working like this, there's a high probability the company can get to profitability likely in 2024 at some point in time. It's just a question of, is it the first quarter, second quarter, third quarter, fourth quarter, okay? When you're making progress like that, that's extremely, extremely impressive. They cut down on their loss attributable to shareholders on a basic and diluted basis by about 46%, right? It's very, very impressive. So I think that matters in a significant way. Now, on a non-GAAP basis, adjusted net revenue is still the same, 37%. Adjusted EBITDA for the company, 278% flip and flapjack in growth. That's incredible. Okay, absolutely incredible. Now, something else I thought was important was they call them members, I call them customers. Their customer count was up to over 6 million now at this point in time, 6.2 million from 4.3 million at the same time last year, which clearly shows they're continuing to attract more and more customers overall, okay? And the last thing I thought was very, very important here overall is when you look at their growth, right? They're growing when it comes to lending products, which is impressive when you're considering, you know, it's been a tougher lending condition environment, but their financial services product, I mean, that's just a growth beast for the company. So overall, I look at SoFi and it's pretty darn impressive what they're putting up, right? There's still risk. At the end of the day, it is still a company that is losing money. So do keep that in mind. That's the big risk with SoFi. But with the progress they're doing, it looks like they could flip to profitability at some point in 2024, which then things start getting really, really fun. But one last thing I'll say that I think is very important for everybody watching this to understand, okay? Because when they flip to profitability, it changes two things. One, a lot more investors can consider SoFi because then it's a profitable company. But, there's a big but. On the flip side, and I think it's very important everybody understands this point, if you're bullish on SoFi, once they flip over to profitability, then people will start judging it much more on PE ratios and forward PE ratios. And so the company at that time is still going to need to be very fast growth to be able to command the type of forward Ps it's going to be trading at, which is going to be quite high, right? At least for the first year or two of profitability. If they have trouble sustaining that growth, and let's say it's a much slower growth story by that time, let's say they're only growing 10 to 15%, you could actually see the stock price move down. And so that's just something to be aware of out there when that day comes and they actually flip over to the profitable side, okay? So just keep that in the back of your mind, something very important. I don't want people to be, let down whenever that day comes, okay? Appreciate everybody joining me as always. Thanks so much for being subscribed, folks. Make sure you get access to that free workshop I put together for you guys. That is a pinned comment down there. How I find 10X stocks, about a 28, 29-minute video. You get a lot of value from that guy. Much love as always, and have a great day.